Generally, I think people can. Just to indicate to me. Oh, see you now, Patrick. You're here now. Okay. Welcome members to the 36th meeting of the Public Accounts Committee in this mandate. Can I advise members that the committee meeting will be recorded and broadcast through Parliament buildings and online. However, there could be a slight delay in moving between any private and public sessions, so please be patient with the system. Can I also advise anybody who may be joining us in the public gallery that they're welcome to use mobile devices as long as they're in airplane mode and that such devices are muted. You can also connect to the Assembly Wi-Fi. The password is in the gallery rules, and it is not permitted at any time to take photographs or record any part of today's proceedings. We'll proceed as follows. We have an apology from Tom Buchanan. We have Patrick Largy joining us online remotely. Okay, members. Can I refer members to the pack for a copy of the draft minutes of the meeting held on the 13th of March at page 6 of the pack? Members agreed or happy with the minutes as written? Thank you. Okay, members, can I ask, is anyone any relevant declaration of interest to declare for this particular meeting?
Member of the Committee for Economy.
Okay.
Chair, same as that.
Okay, perfect. Thank you. Okay, I have no chair's business. Matters rising. There's no matters rising today. No. Okay. And we have no correspondence, so happy enough. Okay, members, we'll move on then to agenda item 7, the Treasury Officer of Accounts briefing on the disclaimed opinion on the Department for Economy Accounts. Can I refer members to the relevant documentation? The clerk's brief is at pages 3 to 6 of the table pack, and the briefing note from the Department of Finance is also in the table pack. Are members content to note both?
Yeah.
Okay, thank you. Okay, members, we'll move on to agenda item 8, which is the Department for the Economy oral briefing on the disclaimed opinion on Department for the Economy Accounts. Can I refer members to the relevant documentation? There's a collective of C&AG report at pages 20 to 29 of the pack, the audit certificate at pages 30 to 36 of the pack, and the Department for Economy witness pen pictures at pages 36 to 40 for members' information. And can I ask, Conor, if you would invite in our witnesses? Thank you. Me? Mm-hmm. Okay, welcome to the meeting. We're delighted to have you with us. Members, we have Ian Snowden, the Accounting Officer, Department for the Economy, Sharon Hetherington, Finance Director for the Department of Economy, Ian McFarlane, Deputy Finance Director, Department of Economy, and also joining us we have Dorina Carville, Controller and Auditor General, and her team from the Northern Ireland Audit Office. You're very welcome. And also Julie Sewell, who will be joining us from the Public Audit and Accountability Branch, Department of Finance, on behalf of Treasury Officer of Accounts. Mr Snowden, Ms Hetherington and Mr McFarlane, you're very welcome to the Public Accounts Committee. Welcome back. Thank you for agreeing to attend at short notice, and I'm sure you appreciate the urgency of why the committee would like to discuss the matters that are before us today. So with that said, I go straight to it. I'll invite you to make a brief opening remarks. Members have a number of questions in relation to the matter at hand, and we'll refer to the questions following your briefing. So, Mr Snowden, you're very welcome.
Thank you, Chair, and members of the committee for this opportunity to address the committee today regarding the disclaimer of opinion from the Audit Office on our 2023-24 annual report and accounts. Firstly, I would like to say that I personally and the senior management team of the department fully acknowledge the seriousness of a disclaimer on the accounts. This outcome has understandably raised concerns with you regarding the accuracy, completeness and reliability of the Department's financial reporting processes. So I hope that in the course of today's session I'll be able to give you an assurance that we are fully committed to doing whatever we can to address the issues that have been identified. I'll take a few minutes just to set out the factors that contributed to the disclaimer, the steps that have been taken to address the identified weaknesses, and the action plan that's being implemented to restore confidence in our financial accounting and reporting. So first, what's led to the disclaimer? I'd like to make it clear that the issues identified by the Audit Office are not issues of value for money, fraud, propriety or loss of public funds. The disclaimer opinion is in part related to the process of consolidating the accounts of the core department and its arm's length bodies into a single set of accounts. So the disclaimer of opinion indicates that the Audit Office was unable to obtain sufficient audit evidence to provide a basis for an opinion on the financial statements. And specifically, the Comptroller and Auditor General has disclaimed her opinion on prior period adjustments that the Department made to the 31st of March 2023 comparative figures in the accounts to the year ended 31st of March 24. Now, without getting into all the technical details of this, the adjustments arose as a result of the Department implementing a new model to produce the group accounts for the year ended 31st of March 2024. So the committee will be aware that a new financial reporting process has been introduced. 2022-23 was the first year of that. It went live. The department experienced quite a lot of challenges and issues in producing the accounts for that financial year. So learning the lessons from that, we put a lot of effort into improving the process. A significant part of that was a new IT model which we developed in association with EY Consultancy, which substantially improves the transparency and reliability of the accounts. When we inputted the information from prior years through this new model, the department found a significant number of differences from the information that was already reflected in the certified accounts for 2022-23. So the department is required to correct material errors in the accounts where we identify them. So to do this, the finance staff spent significant resources and time on investigating the origins of those errors in the prior years, but several balances have remained unexplained. The department took a decision at the end of last year that we had effectively exhausted all reasonable avenues to attempt to identify those prior year errors, and that our resources and those of the Audit Office are better allocated to ensuring the completion of the annual accounting reports for the year and ensuring adequate processes in place to deliver robust figures for the 31st of March 2024 and beyond. So that approach was endorsed by the Audit and Risk and Assurance Committee of the Department, and it was also agreed with the Audit Office. So the Comptroller and Auditor General noted the considerable efforts the Department had made to produce accounts and facilitate the audit procedures. She acknowledged that the Department delivered what it committed to do following the 2022-23 audit. We continue our work to make improvements to our processes to produce group financial statements. And she also acknowledged the complexity of the DFE's group accounts and how that makes the production of our financial statements challenging. So very briefly on the complexity of that, the group comprises 18 component bodies in addition to the core department. 10 of the 18 component bodies do not share the same financial year end. In fact, we have 4 financial year ends amongst the group. 2 of the component bodies are north-south bodies, which are not wholly controlled by DFE and also use euros as their main currency of transaction. None of the ALB shares the same accounting system or the same chart of accounts as a core department. Now, if we were a private sector organisation, we could address some of those issues, but that's not possible in the way that the public bodies are established and how the system operates. So we have to implement different accounting policies, embedded subsidiary companies, intragroup transactions, and it's a very complex set of issues to resolve. Understand that last week the committee asked if there were more complex accounts that we were aware of. We've been able to identify any. And I think it's important to note our accounts include FE colleges, and the Department for Education in England has got a derogation from the Treasury not to include the FE sector in its consolidated accounts. So ours are, as far as we can make out, some of the most complex in the UK and Ireland. So to help us manage this complexity, the Department has implemented several improvements to the preparation of the accounts for 2023-24. And it's actually those improvements which have identified the prior year errors that needed to be corrected, and it also added delay in completing the process of the audit on time. So I want to issue again that we're fully committed to ensuring the deadline for the 2024-25 accounts is met. The finance team has already implemented several improvements in preparation for next year's accounts to try and deal with the issues that we've encountered, including further increasing the capacity and capability of the finance team. And in fact, we have now a second finance director post, and Sharon will, from the 1st of April, be solely responsible for producing the annual report and accounts. And the budgeting part of her post has been given to another member of staff. We have increased the support and communications with our arm's length bodies. We're maximising the use of IT solutions to improve communication channels with all the stakeholders, and we're implementing more rigorous procedures to ensure accuracy and completeness of the financial data. I and my colleagues are committed to working very closely with the NIO to ensure the process is improved and progress is made and lessons are learned from this year's experience. As the Comptroller and Auditor General set out to the committee last week, given the complexities, it is likely to be a couple of years before everything is fully addressed and producing the group accounts becomes more straightforward business as usual. I am fully committed to making sure we make significant improvements in the coming year. My aim is to ensure that future financial statements are prepared to the highest standards and we can withstand the scrutiny of the independent audit and that they are produced on time. So I'm confident the measures we're putting in place will address those deficiencies and help us move forward. The second issue, which led to the disclaimer of the account, was in relation to the student loan outstanding balance. The background to that is that in I think it was 2002, the Department for Education in England, which manages the student loan company, moved to a new financial model for calculating the basis of the loan values. But that only applied to student loans in relation to England. The devolved administrations were not included in that model because it didn't have the capacity at that time to do that. So we are still working on the old model, which produces the estimates. Now, as time has progressed, there has been a divergence has emerged between the old model and the new model and the figures that are produced. We will be moving on to the new model from November of this year. And we're engaging with the student loan companies to make sure that happens as smoothly as possible. However, the consequence of that is that we will not be in a position to address that issue on student loans for the current year's financial accounts. And so the same issue will emerge most likely in this year's accounts. So that is the end of the statement. I'm happy to take any questions the committee's got on any aspect of the report.
Okay, thank you. And thank you for keeping that quite concise and to the point. We have a number of questions, and I'll start if okay. So it's highly unusual for a department, you've already pointed this out, highly unusual for a department to have disclaimed audit opinions on its accounts, and in fact it's a point of great concern as well. There were a number of issues where appropriate explanations were not provided to the Controller and Auditor General, and a significant number of adjustments were also required to the draft accounts submitted for audit. Why did the department find it so difficult to complete group accounts to an appropriate quality? And a further question to that as well is, have you any indication where you can compare with other Northern Ireland departments in terms of financial governance and compliance?
In relation to the first question, the challenges I sort of touched on them briefly what they are. It's an extremely complex set of accounts. So. And that we have to consolidate into the one accounts. So we are working with 18 component bodies. I've mentioned 2 different currencies. I've mentioned the 4 financial year ends. I've mentioned the fact that we don't operate to the same accounting system. And also several of the bodies operate under different financial reporting standards, and those have got to be reconciled. So it is an incredibly complex set of accounts to pull in the reconciliations. What we have to do is draw in millions of transactions from all the component bodies into the accounts and consolidate them across the board and then address any of those issues that arise for the complexity. So that is why it is proven to be exceptionally difficult. We did not have a full dry run before the new reporting system was introduced. So in fact, the first year of the production of these consolidated accounts in 2022-23 was the first time that we'd attempted to pull together all of that information for all of the component bodies together, and we had, I think it's fair to say the department would acknowledge this, had completely underestimated the amount of effort and the difficulty of producing that task. I mentioned in my opening statement that we in the course of producing the 2023-24 accounts, we'd attempted to learn the lessons from that, and I mentioned the new reporting system that we put in place. That new system has particularly built into it arrangements whereby it takes in information automatically and then produces control totals which cannot be overwritten. So any adjustments need to be made then are produced in journal entries. The consequence of that is that the system is a great deal more transparent and the information is a great deal more reliable than the previous system has been. But in the course of producing that additionally reliable and transparent information, that's thrown up the fact that there were errors in previous years' accounts, which we need to try to address. So we are working through the difficulties of those complexities and the issues that we have, that we've encountered. And as I said, we are making a lot of progress on that, but I think it may be a couple of years before we have completely resolved and identified all the issues. In relation to comparison with other arms or other departmental accounts systems, I think we can say with confidence that this is the most complex set of accounts amongst the Northern Ireland departments. Also have to put my hands up and say it's the only set of accounts which have been disclaimed for a very long number of years in Northern Ireland. And I think we acknowledge that as a problem that we need to fix and address.
Yeah, whilst I appreciate the complexity of what is required, particularly given there's 18 bodies, other departments have arm's length bodies as well that they're responsible for in accounting terms. Are you aware of anywhere in the system where there's been a similar issue? They may not have 18 such bodies, but they certainly do have a number of them.
They wouldn't have the same extent of complexity. So with the financial year ends, with academic years, for example, is something that we particularly have to address with Stranmillis College and the further education colleges. And then we've got the two cross-border bodies which operate in euros and have a financial year end of the 31st of December. So we don't think that there are other departments which have got those particular complexities to deal with. I understand that the Department of Education does not consolidate the accounts for all the directly grant-funded schools, for example, which it has responsibility for and which would be treated as component bodies otherwise, because of the complexities that we're dealing with that. So we don't have an equivalent level of complexity in other departments.
Yes, I appreciate that. And so the Department for Economy in Northern Ireland, there's similar function in terms of the department in the south of this island. Have they ever had such difficulties in terms of arm's length bodies that you'd be aware of?
Well, there are three departments map onto ours: enterprise, trade and employment, further and higher education, research, innovation, skills, and energy and climate change. So I'm not aware that they have had those issues.
Certainly in a very unique situation.
Yes.
You had mentioned earlier as well that you've had no full dry run. Can you just clarify what that means, just for the sake of the public record? Okay.
The change to the financial reporting system, it had been agreed in, when was that, 2021? 2020? Yep. So the year before the system was to go live in 2022-23, there would have been an opportunity in the 2021-22 financial year to do a dry run of the process. Unfortunately, we weren't able to do that because we couldn't get all of the components brought into the system in the right way, and particularly issues with the cross-border bodies. So the first time that we had actually attempted to do this, in a kind of, we had no dummy run essentially. We could have done a parallel process the year before if we'd been able to pull all these things together. But the first time we did the full system was the first year of going live with those reports.
And I think it would...
Which was when, just?
2022-23.
22-23.
I was just going to add to that. I mean, really, in terms of the dry run, there was never a dry run that was operating to the timescales that you would need to be delivering for the live year. And so then it really, what happened was in the live year, there was really 3 years of figures being audited then, the dry run, the comparatives and last year's.
Okay, so explain that again. So how long was the dry run exactly?
The dry run, if we've been able to do it, would have been in the 2021-22 financial year. Right. So you attempt to run the process in parallel with the normal accounting procedures before you actually go live with the new consolidated process. But we weren't able to get that done.
The TOA briefing suggests that departments prepare 3 dry runs. Is it 2018-19, 2020-21, 2021 and 21-22, with the planned dry run in 1920 was cancelled due to the pandemic, but the rest, what?
Yep, but I think the point is that the dry runs weren't done in the timescales that would have been needed, so hard closes for each of the ALBs, consolidating that and then sort of presenting that to the audit office, and the audit having been completed before, ideally the audit and that whole process would be completed before you would then start your live year. So, you're building in those learnings. But my understanding, and it kind of predates me, while there was some dry runs, they weren't done in that sort of hard close nature.
Surely they would have picked up the issues that we're now dealing with.
I don't think they would have, because one of the challenges here for our components has been, particularly for the ones that don't have the same year end, has been the ability for them to produce 31 March year end information within the timescales that we need. So we are asking our components to produce that information by the 30th of April. There's 4 weeks to do that. So that was sort of significantly different than sort of a dry run that wasn't really operating within the timeframes.
I think just to sort of explain the complexity point as well, that none of the 18 ALBs are on system. So a lot of other departments would have subsidiaries or agencies or whatever, NDPPs, arm's length bodies, that would be on their own accounting system. So it's already there, it's already able to run reports, you're able to do things. All of these bodies are off system with their own accounting systems, their own charts of accounts, everything. So we're relying on them providing us with information which we then have to sort of remap, and process it then through our systems to try and get a sort of a comparable, consistent consolidation.
All a bit messy, isn't it, Mr. Snowden? Because, ultimately the buck stops with you as the accounting officer of the department. Mm-hmm. So surely this process must be very frustrating.
It is very difficult, it's very time consuming, not only for us but also for the audit office. There's an awful lot of effort that has to be applied into the delivery of these accounts, and it has been a frustrating process, I think, for all of us. There's no question about that. And I mean, like, messy is not an unreasonable adjective to use to describe the process has been. Our job is to make sure that we tidy it up as fast and as far as we can.
Ensure good governance of public money as well.
In order to achieve that end, yes.
And I'm glad you've acknowledged that the Audit Office, the Northern Ireland Audit Office, and the CNAG and our team have spent a substantial amount of time dealing with this situation, more than any of us would have expected. And I just want to acknowledge the work of the team in trying to make sense of this entire situation. Just before I move on to the other members, so Ian, you've been very, very clear about a number of things and honest and forthright. But what steps are you taking as accounting officer for the Department for the Economy to ensure that this is addressed going forward? Can these accounts all be aligned to one deadline, for instance?
In law, no. We would have to change legislation to change the year end for some of them. We are going to do that for the further education sector, but there are other component bodies which we will not be able to do that. And in particular, the issue of the North-South bodies, Intertrade Ireland and Tourism Ireland, that is not within our gift to make that change. If this was a private sector corporation with 18 subsidiary companies, we could require everybody to move to the one IT system, which Ian has just mentioned. That's not possible under our current arrangements, because the current account NI system is being changed over to the new Integrate programme, and they are not able to onboard us anytime within the next number of years. That would substantially help the system, but unfortunately we're not able to do that. And in any event, some of the arm's length bodies will not be able to move on to that system. So, for example, I don't think that the FE sector or the cross-border bodies would ever be able to be onboarded onto the central NICS system. So there are constraints on what we are actually able to do. However, within that, we have got control in our own organisation and through our arm's length bodies. In January, I sent a letter to the accounting officers of all the arm's length bodies saying that having missed the statutory deadline for the laying of the consolidated accounts 2 years in a row was not acceptable, and we could not tolerate a third year happening. So I asked them to make sure that their teams were set up to deal with the closure on the 31st of March and produce those figures by the timeline that we require, as Sharon has mentioned, the 30th of April. I also mentioned that the finance director post has now been split, so we have a budgeting director, and now also we have the audit and account director. So Sharon will be responsible for the audit and account moving forward, and another finance director will be responsible for the budgeting portion. That will help produce additional capacity in the system to be able to give us the attention that we need to do it. And we'll continue to make IT improvements to the system that we've got in place to get the information in more smoothly and to move forward more quickly. Having said that, there are residual issues which will remain, which it will take us a number of years to wash through the accounts.
And in terms of the request that you've made to those various bodies, were you met with any resistance, or are they entirely cooperating with your request?
They're all cooperating, yes. And so I've had letters in response from some, but not all of them, saying that they will ensure that they do whatever is necessary to achieve that.
Okay, thank you. Diane Forsyth.
Thank you, and thank you all for coming to address this really serious issue where, you know, we've heard it's unprecedented for a government department to find itself in the position of having a disclaimed audit opinion, and the Department for Economy has now failed to meet its statutory deadlines for certification and laying of accounts for the last 2 financial years. And Mr Snowden, yourself as accounting officer are personally responsible to produce accounts that are suitable for audit and to ensure that they meet the statutory deadlines, which has been failed to have happened. And we've heard that you put additional measures in place this year, but clearly they weren't effective to deliver improvements. But what assurances can you give this committee that you'll be able to fulfil your obligations as accounting officer going forward?
Well, I've already mentioned some of the things that we're doing. So the creation of the additional finance director post with particular responsibility for this responsibility. We have additional resources in the department to tackle this. The CNAG's report mentions the Northern Regional College and particular issues there. We have had very close liaison with the college around what needs to be done to improve that, including weekly meetings on progress around it. We have provided some additional resources to them and provided a help. And that was the issues with the Northern Regional College were one of the, well, probably the primary reason that we were delayed again this year in providing evidence on time. We have brought in external review to look at their financial processes to make sure that the same thing does not happen again this year as far as possible. And we're pressing them to increase the capacity in their accounts team. They are having some difficulty with recruitment. So everything short of putting them into, I suppose, formal special measures is what we've done with that particular college to help us move forward on that. I've mentioned that I've reiterated to all the accounting officers that they need to provide the information by the 30th of April to allow us to pull together the accounting packs and to produce the information that the audit office needs to allow them to do their part of the process.
And the CNAG explained to us in the committee that it's likely our audit opinion next year will be qualified as well, given the roll forward of the opening balances are dependent on the close of the accounts that have just been disclaimed. Just what work do you intend to do on the current year figures to be able to provide assurances that the starting point for next year is correct?
We've already mentioned some of the work that we're doing to improve the quality of that. I would say that the errors that have been identified, there are no net errors identified in the current, in the 2023-24 financial year accounts. That the prior year adjustments were all in prior years. That's what's given rise to the disclaimer opinion. That portion of it. So we are confident we'll be able to pull together accurate information which will allow that to happen. I suppose just to pick up on a point of what the implications of that will be. I think that I've already mentioned the student loans issue. We will not be able to get that resolved until November 2025 when the Department of Education and the Student Loans Company is able to move us on to the new model. The consequence of that is that the figures for the current financial year, 2024-25, will also be produced in the old model. So the same issue that gave rise to that part of the disclaimer of the accounts will still be in place for the current financial year. So my expectation is, on the logic of that position, is that the accounts will be disclaimed again for the same reason.
And as I said before, as accounting officer, it's your responsibility to make sure that the accounts presented are, keepable for audit, appropriate standard. And just specifically on the 137.4 million of adjustments that was noted on the prior period adjustments, that there was no evidence being able to be provided for, and some of the feedback on that was you'd put a lot of resource into investigating what the basis of those adjustments were that the audit office weren't able to give any assurance on. But effectively these adjustments were made by Department for Economy staff or systems. So somebody changed these prior period adjustments. So somebody did that with no explanation. So I just want to know how setting figures in front of the audit office and the CNAG, where there's no evidence of this amount of money, how you felt that was appropriate in your role as accounting officer in the point of presenting accounts that are suitable for audit.
Yes, that arises from the complexity of the accounts and the consolidation process. So each one of these arm's length bodies and the core department itself in prior years had been audited and had, generally speaking, unqualified or unmodified accounts produced for each. However, whenever you bring them together, and as Ian has mentioned, there's no unified chart of accounts. We have got to try to bring all of that information together into a single chart of accounts in a single form of presentation. In the course of doing that, the IT system that we put in place identified that there had been errors in the prior year accounts. So we've got to correct those errors. So essentially it is items which are in certain lines in the accounts which should be in other lines and need to be moved. The net effect of all of that is not 137 million, but whenever you move information between one line and the next, then you have to count the £137 million, the absolute value. So that is the value of the debit from one line and the credit onto the other. So, and we ended up with £15 million, I think, in one of the years, and £1 million in one of the 1 point something million pounds in one of the other years, where we couldn't actually trace the reasons why the error had been made in the first place. So that is the position that we've got to. I think, just to reassure the committee, that's not a risk of an overspend. That is £15 million potentially understated, overstated. So then it would be an underspend against what we had previously reported. So no loss of money.
Just to the point that I'm trying to make here in terms of this committee and our responsibility to the public as to the transparency and accuracy of accounting of public sector funds, when we're talking about the audit office not being able to stand over and disclaim amounts in the region of £1 billion, or these errors of £137 million, just for you as accounting officer to be presenting these accounts saying they're suitable for audit with these huge numbers there, it is our duty to challenge upon that and make sure that, as we go forward, we don't want to be seeing these numbers again. We want to see the accounts in meeting the statutory deadline, and for us as a committee, for the wider committees, and for the public to have confidence in what's happening with the accounts.
Okay, so just on the £1 billion figure, again, that's the absolute value of that, of the adjustments that were made. So the biggest single component of that was £337 million roughly, which was associated with impairment and student loans. So that had been recorded in our accounts as other programme costs. And we agreed with the audit office that it ought to be recorded as an impairment in the accounts. And that was in the same section of the accounts. The net effect of that at the bottom line is zero, but the absolute value of that adjustment is £670 million. So those are the kinds of changes that have given rise to those quite large sums of money. It is not that the information is not available and what's happened. It's not that there are errors to that value in the accounts. It is adjustments that are made inside the totals and often end up with a net zero. We do have an issue with, as I said, £15 million, which we can't reconcile and explain.
£15 million, too much.
Quite a lot. It is a lot, yes. And that's prior year, against the prior year adjustments. It is not errors in the year to which the accounts relate.
Thank you.
Thank you. Okay, Cathal Boylan.
Thanks, Chair, and you're very welcome. And thanks very much for coming on short notice. Obviously, it's unprecedented, but I just want to clarify some things. And I know the Chair, you may have answered for the Chair, but from your own clarity, would you say is a case of money being inappropriately used or money lost in this case?
No.
So basically, because we're hearing last week, and then the CNAG said it was a complex process, there's no doubt about it. So we're just trying to find out, because it's about public spend.
Yes.
And it's about accountability in this committee, and that's so much, just want clarity in that. Just another few things. See, in terms of, and you've mentioned a number of additional things you're doing, do you feel you'll be able to get back on track with those additional changes?
I think we'll make a substantial improvement for the current year's financial accounts compared to last year's, which were in themselves a substantial improvement on the position in the year before. So we are making a lot of progress. What I'm not in a position at this point to stand over is to say that that will be 100% perfect, because there may still be some issues and complexities which will emerge out of the consolidation process.
And to be fair, like I said, the CNAG said you're working with them to try and address some of those outstanding issues. The other thing is, and maybe I heard you talk about the derogation. Could you clarify exactly where is it, England or Westminster?
So the Department of Education in England is responsible for further education, whereas that sits with Department of the Economy here. So the Treasury has given the English Department for Education a derogation. In other words, they're giving them a bypass on having to consolidate the accounts of the FE sector in England because of the complexities of doing that. So our nearest counterpart, I suppose, across in England doesn't have to consolidate some of what we have to consolidate in our accounts.
Is that an option on the table for ourselves?
Well, I suppose we could approach the Department for Finance and ask that, but I think we will be able to make progress towards consolidating all of those.
Just my final question, obviously, and it's back on the getting back on track. Do you feel the department has the capacity and capability to address this issue? It may take a longer piece of time, but
I think we have. I'll caveat that by saying that I'm sure the committee is aware that recruitment to some of the professions in the civil service has proven to be difficult. Especially it has proven to be difficult to recruit for accountancy grades because the salary on offer in private practice is currently much higher than what you get in the civil service. But we currently have around 80 accountants working in the department. So we should have the capacity to be able to pull these things together. And to make the improvements that we need to make over the coming year. And it's a strong team as well.
thank you very much. Thanks, Chair.
Padraig Delargy be joining us remotely. Padraig, can you hear us okay? Yes.
Yeah, Chair, can you hear me?
Yep, perfect.
Okay, thanks. Well, look, thanks for your responses so far. I suppose, look, what I wanted to highlight was the fact that the report does highlight that there's a regular expenditure of 18.3 million from 23 to 24, and then the audit queries have been raised. There was an additional 65.3 million, which was retrospective approval in order to avoid further irregular expenditure. And look, I appreciate you've already highlighted and answered several queries around this, but I suppose for me there are three questions. You have highlighted a number of steps, but what steps are you currently taking to ensure that there's a clear understanding by DFE staff of instances where Department of Finance approval is required?
Okay, I don't actually think we have talked on that regularity point, so I'll just explain the background to that. So there was a change to financial reporting standards called ESA 10, which was introduced a number of years ago. That allows expenditure on research and development to be classified as capital expenditure as opposed to revenue. So in 2022, the department moved from classifying our expenditure on research and development, including expenditure on the postgraduate awards scheme, as resource expenditure, and then transferred that over to capital. Now, the postgraduate awards scheme had been in operation since 2002. It was pretty much a steady state service that was provided by the department. What we hadn't anticipated at the time, and the staff hadn't appreciated, was that because the expenditure had been reclassified from resource expenditure to capital expenditure, it needed to be treated as a new capital project. They had assumed it was simply a change in the classification of the expenditure, since nothing else had changed in the expenditure in the programme. And the same thing applied then to the other research and innovation expenditure that you mentioned there that received retrospective approval for. So because they didn't appreciate that it had to be treated as if it was new as opposed to a continuation programme, they didn't realise that they had to produce a business case and seek DOF approval for it. And that only became apparent during the course of the past 12 months. So at the same time, on the postgraduate award scheme, we were actually doing a review of how that operated, and some changes have been implemented and agreed by the Minister, which will be more directive about how the funding is used to support economic development in Northern Ireland. And so we have produced a business case which reflects that change of approach, as well as seeking to regularise the expenditure, and that's been passed to the Department of Finance. Now, because we didn't have a business case in place in 2002, I couldn't ask for retrospective approval for that, so we just have to accept that that expenditure is irregular, and it will also be irregular in the current financial year as well. On the other expenditure, we did have business cases in place and were able to approach the Department of Finance and understand that. So then your question is, what have we done to ensure staff are aware of that? We have updated our guidance on all of this and ensured that people are aware of the processes. I think, in fairness, this is a pretty obscure set of circumstances because it is unusual. A steady state service which has been transferred from one type of expenditure to another and ought to be treated as new is not a commonplace occurrence. So it's not particularly surprising that people weren't aware of the requirements around it, but we've reminded people that whenever something like this changes, that they do need to be aware of the potential implications and seek DOF advice on it.
Well, it is reassuring that that's been put in place now, and I suppose that you've already emphasised very strongly that it wasn't the inappropriate use, it was based on the complexities around that. So I do appreciate that. And I suppose one of the other questions, just to follow on, and Cathal raised this point as well, but in terms of capacity now going forward, how do you ensure that there is capacity within your own internal financial division? How do you ensure that information cascades throughout everyone who's going to be involved in these processes? How does that communication become crystal clear to ensure that going forward that this is very, very clearly communicated and understood?
Well, we have a number of communication methods inside the department that we use. So when something like this arises, we will organise online seminars for staff. So we have it's called DFE Inform You. So they can be in any one of a variety of things. So when there are significant lessons to be learned when something has happened and that people may not be aware of, then we will use these Inform You sessions as a way of disseminating that information, as well as through the written guidance that is issued. We find that kind of briefing session to be more effective at getting the message across and simply relying on written briefing alone.
Okay, thanks for that. And on the capacity issue?
Capacity issue then, so I've already mentioned that we split the finance director post to create additional capacity at senior management level to take this forward. So we will have a team which is particularly focused and dedicated on producing the annual report and accounts. And then the other finance director will manage the in-year budgetary management. And I think that will help give particular senior level focus on the issue will help us.
Yeah, no, appreciate that. Thanks for your clarification on those points.
Thank you, Patrick. Colin Gildernew.
Yep, thank you. And it kind of builds a wee bit on, you've covered a part of it in your answer to Patrick there, but I suppose I'm wondering how you're going to monitor and ensure that your internal improvements that you have set out there, how those are going to, that you'll assess that those are certainly happening, so that this will be addressed and brought into line and into more regularity going forward.
So the team have produced a comprehensive plan for what we're going to do over the coming number of months to actually ensure we achieve the statutory deadline, or do everything that's within our power to achieve that statutory deadline. And so we will monitor our progress against that as the year progresses. I've already mentioned that we have very close liaison with the Northern Regional College, where we've had a number of issues around the capacity there in order to meet some of our requirements and deadlines, and those weekly meetings are continuing to make sure that we get that delivered. And so we will be keeping a close eye on that. The Audit and Risk Committee of the department is chaired by an independent member. He's a qualified accountant. He's very closely exercised on all of these issues, and he questions us closely on what we're doing to make sure we're achieving all of these things. So I think there will be quite a lot of scrutiny and attention given to that over the course of the year, including by myself, but also by the independent board members.
Thank you. And can you outline what steps you took to keep Department of Finance informed of the issues in relation to the 2023-24 audit in advance of the CNAG's report?
Okay, well, we first became, we knew that the accounts were going to be delayed, and so we had advised the Department of Finance and the Economy Committee of that in November, when it became apparent that we weren't going to be able to meet the statutory deadline, and kept them up to date on progress as we moved through the year. First became aware of the disclaimer opinion at the Audit, Risk and Assurance Committee meeting on the 5th of February, in which it was indicated that that the accounts would have a disclaimer opinion on the true and fair financial position for the reasons which we've been discussing so far today. So that was the first time I had heard from the Audit Office that was going to happen. I think the previous Friday, which was the 31st of January, Sharon had a meeting with the team where that possibility was discussed, so it wasn't entirely clear whether it would be the 2023-24 financial year or possibly the one subsequent to that in relation to the student loan issues. So that was the 5th of February is the first time I became aware of that. The draft audit certificate and report came to us, and that was on the 26th of February, and that's when the Comptroller and Auditor General phoned me to let me know that that's what the opinion would be. And so then we advised the Department of Finance and the Economy Committee as soon as possible thereafter. And I think the date for that, 26th of February, was a Friday, so it was at the beginning of the following week, which is the start of March.
Thank you.
And just for clarification, so when the CNAG phones you to let you know of the intended action that the Audit Office was about to take, how many months was that past the deadline?
So that would be 3.5.
Were you expecting this, or was it a shock?
Well, as I said, the audit manager had outlined that this was the expected opinion that was going to come on the 5th of February. That was the first indication that we had that was what it was going to be.
Okay, thank you. Colin Crawford.
Thanks, Chair, and thanks to the panel for your time and your answers so far. Just, Ian, follow up from Colin's last question. Can I ask what specific advice and support did the Department of Finance offer to your department to ensure compliance with the financial regulations?
Well, there is guidance issued by the Department of Finance on a wide range of issues, and there's the obviously the full financial reporting manual and all the other guidance that we are required to follow. Specifically on issues which are mentioned in the CNAG's report, there were two things that we sought DOF advice on. One was the issue that Mr. Delargy raised, which is the postgraduate award scheme and the need for business case approval in relation to that, to confirm if that was actually required once we'd identified the possibility that it may be. The second issue then was in relation to pensions in the FE colleges. So we had approached the Department of Finance for guidance around that once the issue had been raised, and we didn't get much beyond pointing us to the guidance that was available at the time. I think our reflection on that, the lesson that we would learn from that, was that we possibly could have gripped that matter sooner rather than waiting for DOF to come back with a bit of advice. So we would accept that there's something we can learn from that.
Thanks, Ian. And then I know you've already touched on NRC already, but I just want to go back just for my own clarity. The CNAG have reported that in the last 2 years there have been particular difficulties in getting appropriate information and explanations from the NRC College to support your group accounts production. Does the department, and do you as Chief Financial Officer, have suitable controls in place over the NRC to ensure that it fulfills its obligations in respect to financial reporting?
We do have the usual arrangements in place with any arm's length body of a partnership agreement and a sponsor team. The sponsor team is in very close liaison with all the colleges on a regular basis, especially in relation to financial issues and other governance matters, for example, whenever complaints are made by students or parents. So we have quite close oversight arrangements in place with them. I think this is not I'm not intending this to sound like an excuse or anything, but it's part of the explanation of the context. So the Northern Region College currently has during the course of the 2023-24 financial year, had two large capital build projects underway. we suspect that their attention was more directed towards the completion of those two large capital bill projects than it was the completion of the accounts, and they perhaps did not give the attention that was required to the provision of the financial information that we needed to allow the accounts to be completed. The Chief Executive of the Council, my discussions with him, is fully aware of the significance and the importance of these issues. He is himself a professional accountant, and so he understands that. He has done what needs to be, he's put in place measures in order to achieve what needs to be done. I mentioned that we are continuing to have very close liaison meetings specifically on this issue and are providing assistance and help where we can. They have continued to experience some difficulties getting capacity into their team and recruiting people, and such recruitments as they made have only really replaced people who have left. So there's still some work to do there, but we will be keeping a very close eye on them, and we have brought in additional external scrutiny, I suppose, or a review of their financial processes to give us some recommendations of other things that we may do. If it continues to be the case that the college is not able to deliver what we need to do, the next step under the further education legislation would be for the department to put the college into what might be called special measures, but essentially we take over responsibility for financial management of the college. It is not something we would want to do because essentially it absolves the college itself of the responsibility of the management, plus it gives us the work to do, which we really don't feel that we're in a position to really take on. But if it becomes necessary because we're not getting the progress we need, that's a measure that we will consider.
At what point do you make that decision?
I suppose it will be in the middle part of this year. If we're on the same trajectory as we were in the past 2 years, we'll have to make a decision around that.
And are they conscious of the very serious risk
Yes.
of that happening?
Yes, they are.
Okay. And do you feel they're cooperating with?
Oh yes, they are absolutely cooperating. There's no question about that. It's still a question of the capacity, whether they've got the capacity in place in the college finance team to be able to deliver what we need.
And have they made any adjustments to ensure that that's the case appropriately?
They have brought in some agency accountants last year in order to help pull together the pack of information that was required, and they have made some attempts to recruit, but those attempts have not been successful. So we continue to press them on those issues.
Why have they not been successful?
Well, against pay levels, I think, is essentially what it is in the public sector compared to what's now available in private practice for accounting professionals, at the grades and levels at which they require the staff to be in place.
Okay. Thank you. David Honeyford.
Thank you for coming in. Your department obviously oversees the economy. Every small business looks to yourselves and to the department to set the agenda on where they work. Small businesses' accounts are late from time to time, but there's a consequence that small business pays, and it's financial. And every plumber, spark, whatever the small business is, will pay a fine. So what are the consequences for this on the department?
Okay, in financial terms, we obviously have to apply a large amount of resource and time onto dealing with these issues that we would rather be spending doing other things. So there's a cost to that in terms of the work that the department has to do. Unlike the private sector, we were not operating under the same arrangements. So whereas a private company may be fined for late lodgement of accounts, the consequence is I'm here whenever I shouldn't be. I think essentially answering the questions that the committee has about why we've not achieved what we have to achieve. I suppose the inference behind your question is whether somebody has messed up to the extent that disciplinary action is required. I'll have to say that I am absolutely 100% satisfied that the reason why these errors have been identified as brought through isn't our attempts to make the system better. It is not a failure, and we have done absolutely the right thing. I think it would be very unfair if staff who had done the right thing subsequently found themselves to be punished for having taken that action and done the right thing.
Consequences you've said are actually detrimental to the economy, because the people that are actually looking to your department for help, or what you're saying is we've got to put more resource into this, and your time's taken up by this, so that I'm just sticking up for the small business. The small business guy gets financially fined. He gets fined. There is a consequence for that delay. How can this just be shrug of shoulders and we'll work towards? It's always looking forward. There's got to be, surely there's, there's got to be consequences within the civil service when stuff isn't brought in time.
I entirely understand the perspective that you're bringing there, and I wouldn't dispute that some people look at this like this. I would say the differences between the department and small businesses. A small business would never have to do a consolidation exercise of the kind which we have had to do. If we've been operating under the old system and the accounts weren't consolidated, this meeting would not be taking place and the disclaimer would not have happened, except possibly on the student loan issue. So we do have to deal with the situation in front of us and make improvements and fix things. That's what stepping up and taking responsibility is about.
Can you give us an assurance that lessons have been learnt as we move forward? And I appreciate you weren't there, Ian, but that you're the department of RHI. Mm-hmm. So is there a effective learning that's happened and has been applied that the public and the businesses there can be assured that this won't happen going forward?
Okay, so some of the critiques around the RHI scheme were to do with transparency about financial information and whether risks were being properly managed. To, I suppose, reiterate a point I've made maybe a couple of times already. The errors which have been identified in the prior year accounts have arisen because of work that we had done to make the accounting system more transparent and the information more accurate and reliable. So the lessons have been learned and they've been applied, but the consequence of that is that we've identified prior year mistakes and errors and adjustments that need to be made. So therefore, I suppose the assurance of the lesson, counterintuitively may be the fact that I'm having to sit here now and explain the fact that we have had to make these adjustments and the difficulties we've had trying to resolve it in our attempt to make a system that's more transparent and accountable.
So for the public watching this, I appreciate you're saying you're made it more transparent, I think, but the public yesterday, the most vulnerable in our society, got money removed from them moving forward, and yet we're sitting here with 136 million that we can't account for effectively, is the bit that the public would see as, how does this, I don't know how that balances, so it's the assurance to move forward that this won't happen. That's the bit I'm getting at.
So just to be 100% clear, there's no indication that £137 million has gone missing anywhere. What's happened is in the accounts we have adjusted how that's recorded in the equivalent of the balance sheet, the profit and loss statement, and we cannot trace the reasons why they were in the wrong place to start with. That's essentially what's happened, but it's not to say that any money has gone missing, any money has been misspent, any money has been defrauded, or there's been poor value for money in delivery.
Thank you.
Thanks very much for that, David. Cheryl?
Thank you, Chair, and thank you so much for coming to the committee. Kind of just want to follow on from what David had said there, just in terms of the key legal and reputational risks. I know we've detailed this slightly, but if you could kind of allude to what impact do you think this has had on public trust within the Department of the Economy? What risks do you see that will come from this, and how are you planning to mitigate these?
Okay. In terms of public trust in accounting, Mr. Honeyford's already mentioned the department's got the legacy of RHI to deal with. I think that the main risk I've got to manage is, because we have issues to resolve in relation to RHI, is to ensure that we're able to demonstrate to people that the course of action we're proposing to take is actually the correct one, that it's supported by evidence, and it is in fact financially the best thing to do and also value for money. Now, I suppose that having a disclaimer on your accounts makes it more difficult to persuade people that you can be trusted with that information, so it does make our job more difficult. There's no question about that. I think that it is something we've got to do a lot of work on in the department, and the only way we can resolve that is becoming much more effective in our delivery against what we're expected to achieve, and to demonstrate that we're doing the work well. There's no alternative to hard work to push through and all of that. There's no easy solution to recovering that trust. You've got to earn it.
And is there the risk that you see, and have you mitigated for these? You know, are you aware what could potentially come down the line from the results of this, these accounts? You know, are you aware of what could potentially happen and how to mitigate against that?
Well, we have a number of significant pieces of work and policy changes that we want to bring forward, which may be affected by this. So, for example, I've mentioned the RHI. The previous minister made a commitment in the Assembly to bring about the closure of the scheme, an orderly closure of the scheme. So I can imagine that this will feed into the discussions around that, about the reliability of the information the department provides. We're going to introduce a new renewable electricity support scheme to help us achieve the target of achieving 80% electricity generation from renewable resources by 2030. Again, that's a complex piece of work. We need to work hard to make sure that people are satisfied that what we're proposing is robust and workable and will be delivered. Those are two things that come up. If we are making changes to student loans, and student loans is one of the reasons why our accounts have been disclaimed, then that is an issue which we will have to work hard to persuade people that the financial information is accurate and reliable and correct.
And then last question from me, just in terms of what improvements have you identified to restore this public confidence as well, but also trust with key stakeholders and arm's length bodies that your department can obviously manage financial accounts going forward?
I think I would go back to the point I made in response to your previous questions. The only way to do this is through hard work and effective delivery. I think that is how we'll satisfy stakeholders in the business sector that we are working in the correct way. Some of it's about explaining how we've ended up in the position that we've ended up in. I hope I've attempted to explain that clearly today. And other times it's about making sure we're effective in the delivery of what we set out to do. And I think that is a piece of work which will be taken forward over the next number of years, and it is not going to be fixed in any particularly straightforward way about anything to do with accounts. It is more about holistically how the department performs.
Thank you, Chair.
Thank you. Just a number of just slight follow-up questions. You had said to David Honeyford earlier, David was asking about the consequences, and he says, well, the consequences that you are before us, and yes, you're right. I don't think any permanent secretary looks forward to sitting before this committee. But in terms of resources and time, how is that quantified? How is that measured in terms of an accountability? I'm conscious that the Northern Ireland Audit Office have spent a significant amount of their time and resources dealing with this situation, where they could have been putting their energy and focus on other problems across the system. So how would you measure because there is a cost to this? There's a significant amount of resources from the NIAO and from your own department to try and rectify this situation. That does come at a cost to the public purse. If this was a private organisation, business, this would be resolved quite quickly because it costs money. So how do we move this along in a timely fashion in the interests of public money and resources?
To quantify how much it is, I think it'd be quite difficult, though I think internally we've discussed this, and it may be approaching £1 million worth of staff time spent inside the department dealing with this. In a meeting we had before Christmas with the audit office, the audit director estimated, I think it was around about £400,000 roughly that the audit office has spent working on this. So it is substantial in terms of the cost of the staff time involved.
Per year?
For the past years, through the accounts
total,
which we were talking about today. Now, we would want to get those numbers substantially reduced. Some of the things we are doing will automate the processes that will produce the information that go into the accounts, and hopefully that will provide information which will allow the audit office to do their part of the job more quickly and with less resource allocations. It's a big department and there's a lot of arm's length bodies, so it's a complex task for us, and it will always be resource intensive and time consuming, but we can put in place measures which will allow that to be sped up.
Yeah, so just for clarification, £1 million is the cost to your department and 400,000 is the estimated cost to the, so 1.4 million on
I think it wouldn't be that far away. I mean, there's no precise way of calculating the cost inside the department, but it is, given the amount of everybody's time that's been involved in working this, including my own, I would say it wouldn't be far away.
I have no doubt, although 1.4 million is a significant amount of waste of public money on something that should not be as difficult or as messy as the word that I can only describe. A word that you've used continually, Mr. Sloan, throughout the evidence session to all members, and it's probably been said more than any other, is complex. It's a word that is shared, and I suppose has been shared with this committee by the NAAO, who have been very, very helpful to the committee in helping us understand how this came about, as you have today, in providing answers to the questions that you've taken from us. I appreciate this is complex, but there's an expectation from the public that these issues are rectified. You are the accounting officer responsible. And whilst I appreciate the complexity, I have no doubt it's an extremely difficult position for you to find yourself in. Is it an impossible task in the immediate term to resolve this? And what is your estimate in terms of time to try and resolve it? Are we going to be having this conversation in 3 years' time and 2 years' time? When is it going to be resolved? Now, I appreciate you're saying you're responsive for the department. The department has 18 bodies, but you're the centre spoke of this wheel. So how do we get this all in shape?
Is it impossible? No, I don't believe it is. Does not mean it's going to be easy. I think the CNAG in her report said it could take several years to resolve this. I think it's important to be upfront and clear with the committee that the prior year adjustments will continue to have an impact on our statement of financial position going forward. So those will continue to appear in the annual report and accounts. I've already mentioned the student loan issue, and unless we can provide or we can identify what information would allow the audit office to be satisfied about the reliability and accuracy of the information in the student loan, the old model, before we move to the new one in November of this year, I think that will continue to be an issue which will affect the accounts, and certainly if the issues are severe enough to require the 2023-24 accounts to be disclaimed, we won't have them resolved before the 31st of March this year, so it inevitably means that what the CNAG has to form her opinion on this. It seems to me to be inevitable that they would be disclaimed on the same basis for 24-25. Not a position I'm very happy about, but there's limited that we can do at this point to change that outcome. Hopefully we'll be able to get that issue resolved for the 25-26 financial accounts, and so whenever the new model's in place, we'll have a much clearer position, and then we'll be able to provide the satisfactory assurance that the NIO needs. Part of the reason for this being difficult is that in previous years the NIO could rely on information provided by the National Audit Office whenever they looked at the model operated by DFE England. That assurance is not now available for the old model, so we find ourselves in a position where the Northern Ireland Audit Office can't get assurance from the national authorities, which then would allow them to form an opinion. That will persist in the current year. So I think I would expect the student loans issue to be an issue for the current financial year reports, so they hopefully get those certified and laid in November of this year. The other issues, I think we will have made substantial progress in resolving how the consolidation works. Cannot predict whether or not there might be new issues will emerge and be identified out of that, but if we have committed ourselves to a process of making sure the accounts are more transparent and accurate, there's always a possibility that will happen. But we should make substantial progress on that issue, I think, over the next few years, and shouldn't be in a position, I hope, beyond 25-26 where I'm in this position, talking to you about this.
Dan?
Yeah, thank you. And Mr. Norton, just a further comment from me. Whenever we find out about this disclaimed audit opinion, it came as quite a shock, unprecedented. We hadn't seen this coming through before, and I just want to take this opportunity to ask you, is there anything else that we should be expecting to come down the line from your department in the near future? Because for me, the key thing here is the lack of what I feel is openness and transparency around some accounting information. Being the sort of person that likes to look at departmental accounts as I'm reviewing budget proposals as they're coming through. I couldn't find these departments, and I had asked a few times where they were. And another one of your consolidated bodies is Tourism NI, where I've been really concerned that there's no reference on their website to the fact that they're 2 years behind on their annual accounts. I've had to email them. I have a question and a response from the Minister this week saying that the 22-23 accounts are finished and should be laid soon. The 23-24 are in process, but that's 2 years behind we are in those. It's one of the consolidated bodies, and I just want to ask you, with regard to Tourism NI or any other body, is there any other serious opinion coming down the line that we should be expecting to hear about from your department?
In Tourism NI, there's an ongoing issue about the legal varies around the fees which are charged to businesses for registration certification processes. Now, some of this is connected to during COVID, when fees were not collected from bodies and whether there was legal authority to do that, and then some of it is about the actual legal varies to collect those fees at all. So that's an ongoing issue that still hasn't been legally substantially resolved. There is also an issue in Tourism NI about a scheme which was run in prior years to promote tourism businesses in Northern Ireland and the Republic of Ireland. It was delivered through an arrangement with the Northern Ireland Hotels Federation. It transpired, we think, that the legislation governing Tourism NI, which is now about 40 years old, had not envisaged that kind of arrangement being in place, and therefore was out with. So those are issues which are known about and are coming through. I have not been made aware, and as part of the annual assurance process, every 6 months I ask all groups in the department and all arm's length bodies to submit assurance reports in which they have to identify any emerging issues which ought to be brought to my attention immediately, and there has not been anything brought to my attention immediately around that. We are going into a difficult budgetary period for the next financial year. It is possible that the outworkings of that budget may create financial stresses which give rise to new issues, but at this stage I have not been made aware of any, and I am not aware of any.
Thank you. Do any of you anything to add? No? Happy enough. Julie? Happy? Okay. Thank you. Have you anything further you'd like to?
No.
Okay.
Hopefully not see you next year, but I suspect I probably will.
Okay, thank you, Mr. Snowden, Ms. Hetherington and Mr. McCarthy, for being with us today. We do appreciate it. It's an entirely very complex situation. Nonetheless, we have a responsibility to the public to provide answers to these very important questions and ensure good governance of public funds. So it's a clear reason why you are before us today. We do appreciate it, and we do hope that you can find a resolution to this problem speedily. To provide that confidence to our public that expect us to be well above these issues and on top of them. So thank you very much for being with us and for your time today. Okay. Okay, members, just following that session, next week we will hear an oral evidence session from the Treasury Officer of Accounts, which will provide further insight into some of the matters that have been raised by members today. If members are agreed, we'll now move into closed session.
Great.
Thank you.
Senate Chamber. Sound.